Hey there, Forex traders or potential Forex traders. Let me introduce you to TradeCalc. Quite frankly, it's the best money management and trade analysis calculator for Forex traders in the market. And courtesy of Pip Club, it's absolutely free. Let's take a quick look at TradeCalc and then send you on your way to get your free copy. First, you should know that TradeCalc evolved from real traders who teach the Forex, and in fact have in some way directly or indirectly been affiliated with the training of over 12,000 traders. The earlier versions of TradeCalc were used as a teaching tool, and now this valuable resource has grown to become a resource every Forex trader should be using with every trade they take. TradeCalc is a very simple Excel calculator. It has three principal components. The first is designed to assist the trader in determining how to put risk in his or her trade. It also shows the return on account for trades based on pips gain, as well as lets the trader establish a desired rate of return and then calculates the trading performance it will take to generate that return. Part 2 is merely a weighted average calculator for those more advanced traders who leg down and spread risk out over several price targets. The third part is a lot distribution table. Before we take a close look at TradeCalc, let's make sure everybody's on the same page here in determining how many lots to put in a trade based on a given risk strategy. So what we're going to do here, as you can see with the formula, is take our core equity, which is basically the account balance that's not currently exposed or tied up in a trade where there is exposure, times the percent risk you desire, and all that's going to be divided by your stop loss, as you can see, times the value of 1 pip. And again, so everybody's on the same page here, typically for USD pairs, a pip is going to be equal to $10 in a standard account, $1 in a mini account, and 10 cents in a super mini account. So when you run this calculation, your result is the amount of lots you may place in a trade. Now it's funny, having taught for many years now, how few traders actually know this formula and are out there just trading willy-nilly. That's why you have so many people margining out in their accounts. Hopefully you can see that this risk and the resultant lots you use are based on your stop loss value, which is why once you open up that stop loss in a trade with the lots already purchased, you're really just increasing the risk in the trade, and that's why we don't do it, right? Okay. So let's look at TradeCalc in that first part in the upper left-hand corner. There are 4 required fields and 2 optional fields to enter. And I'll point out that if you mouse over any of the text that sits in front of a red arrow, what's going to happen is you're going to get a pop-up that has instructions or comments or something of insight about that particular field or that particular calculation. So then when we want to determine how many lots we can trade, we're going to enter the value of a pip, which again is based on the type of account we're trading. We're going to enter our core equity, the amount of risk we want to have in the trade, and the size of our stop loss. And what that's going to do is going to return, TradeCalc's going to return the number or the position size and show you how much money you do have at risk in the stop loss. Now, I will point out that we run a calculated number of lots and then we round it down to lots that you can actually trade. We do recognize that some trading stations let you trade fractional lots, others don't. So we want the calculator to be available for everybody. Now below are the optional fields. These are fun. Projected profit in the trade. You can enter the number of chart pips you're projecting in a trade or as a target. And with the above parameters you've already entered, that being risk and the account balance and your stop loss, we can then project out profit and return on account as well as reward to risk ratio in the trade. Now if we enter the bottom field, which is desired periodic rate of return or return on account, we can have even more fun. Okay. Now I'll point out that desired periodic return on account can be for any period desired, but we're not taking compounding into consideration here. We're just giving you simplistic calculations. So what this does, it's going to take the profit and the return that you entered on the trade, and it's going to show you how many like trades and how many chart pips you would have to gain in order to achieve that periodic rate of return on the account. It's really quite amazing to see, and quite frankly, I use it to establish my trading plan month to month. In part 2 of TradeCalc, we have a simple weighted average calculator, and what this does, it's really useful for traders who have multiple price targets in their trades, so they can take the pips gain and the amount of lots laid down at that target, and TradeCalc's then going to calculate the overall average profit per lot in the trade. And then you can take that figure and use it as your target in future desired return on account calculations. So it's pretty handy in that sense. The The bottom part of TradeCalc is literally just a lot distribution table. And again, it incorporates the value of the pip and the core equity you entered above in TradeCalc. And it's going to show you with varying stop losses across the top of the table and varying risk percentages down the side of the table how many lots you can place in a trade. And it's also a handy table to show you and to point out that for the same number of lots, when you increase your stop loss, how you drastically increase your account's risk in the trade. Well, that's a quick overview of TradeCalc. You can get your free copy, courtesy of Pip Club, by merely going to fxtraderscalculator.com and requesting your free copy. Again, that's fxtraderscalculator.com. Have a great day, guys.